P&L is what most people would call that, but understanding what's going out and what's coming in is the very basic understanding, but there's much more beyond that. We really believe that the numbers tell a story for a business, Candy. And the basic P&L is important because you want to run profitably.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Let me tell you a little bit about my guests today. Today is a bit different as I have two guests today, so let us learn a little bit about each of their backgrounds. Tate Kerst and Ben Mossman form a dynamic group of seasoned professionals who have made significant contributions to the financial advisory and coaching space. Tate Kerst began his career in education, where his passion for coaching athletes and teaching English shaped his early professional years. Eventually, he transitioned to financial services, guiding advisors through the process of growing their practices. Ben Mossman's journey took him from a degree in environmental design to financial advisory. Ben's coaching style emphasizes self-reflection, growth, and accountability. Together, these professionals are united by their dedication to helping business owners succeed. They share a deep commitment to helping others unlock their potential. So Tate and Ben, welcome to the show.
Thanks, Candy. Excited to be here.
Thank you, Candy.
I'm glad to have you here too. It's going to be interesting, like I said, just to have two guests at one time instead of the typical one that I have. And so I would love to hear your story too of how you two have come together to assist entrepreneurs with financial services.
Excellent. So yeah, we've been in the financial services advisory space for myself about 28 years. We began our careers as financial advisors. I'll let Ben share a little bit about his, but in helping consumers and businesses kind of set up and run their businesses. And then that morphed as I moved up with the company I was at into leadership. And I got the opportunity to start what we called really a practice development for financial advisors. Practice development part at that time was helping them to run their financial advisory practices like a business. And there's a difference between running a practice as a professional and understanding it as a business. And that's really where we look to delineate from that side. So I had the opportunity to really start that from scratch in 2012. And in 2017, I got to iterate that department. At that time, I brought Ben and Bill, our other partner, on at that time, and they served to help coach across the country different financial advisors, business owners in that space. So when our company got bought, we decided that we'd branch out and help all business owners and entrepreneurs really understand their business better and run their business better by taking a little bit different approach than a lot of coaches and consultants do. So that's kind of how we ended up together. I'll let Ben kind of elaborate on that.
I certainly got the fine points. I did start my career in financial services on the advisory side as well. So I ran a practice for a while, and eventually my journey kind of took me to the leadership and development side of things, working with other financial advisors and helping them develop their businesses and develop their careers. And I really enjoyed that side. So when Tate made the offer to join his team, it was something that within our broker dealer at the time, it was a team of people it's small at that time, but it expanded from that. But a team that really we saw as making a huge difference in the lives of financial advisors. So it was a no-brainer for me to join. And I think when we eventually branched out, the three of us, I think what brought us together along that was our shared philosophy on how we can help business owners, financial advisors grow. And really that we believe they're all very unique. And we wanted to bring that same approach of a process to them to really help them think like business owners, understand their next levels of success and what to do to reach that. So it really was a shared philosophy that helped bring us together at that point.
Well, I know today we're going to be talking about like different financial reports and what business owners, can do using that information to make wise decisions. But I know in my experience too, a lot of financial advisors I've known have been more like on the investment side, and they understand, of course, the market and all the ups and downs and things, but not necessarily all of the financial reporting too. So it's kind of intriguing how you guys are coming and having that experience, because there's not as many out there that at least that I have known, that have looked at it kind of in this holistic side of things. So I think this is going to be an interesting, conversation for you to even share with people from your perspective, even some of the financial services, as well as looking at reporting and all of those metrics and stuff. So I'm excited for this conversation. So one question I wanted to ask first is, can you tell the listeners, what are the key financial reports that you feel entrepreneurs should really be focusing on that would help them with their business management and give them the insights that they need to take those actions that will help them move even more, forward than where they are right now?
Right. So, obviously the key report is just a basic cash flow analysis, right? P&L is what most people would call that, but understanding what's going out and what's coming in is the very basic understanding, but there's much more beyond that. We really believe that the numbers tell a story for a business, Candy. And the basic P&L is important because you want to run profitably as you go. Most business owners don't want to go into endless amounts of debt. But below that P&L, there are key ratios that work for every business that a business owner needs to identify, right? Sales per customer, and if you're building a service division inside of your business that's going to service those customers, you want to measure the ratio of service providers to customers. And you want to measure what you're producing in terms of revenue per service person and per your salesperson, right? There are two levels in a business. You've got your producers or your sales side that cause revenue to come in from their sales, but you also have the support side. And it's that support side that enables that customer to be happy and come back as a repeat customer. So most business owners don't really break down, we've found, those key ratios, which can answer kind of two of the main questions we get a lot, right? Who do I need to hire and when do I need to hire? And we found those ratios across any industry can really point to when somebody needs to start to hire so they can maintain capacity and therefore keep growth going rather than being behind the scale from that side. So the basic P&L is one place to start, but there's other key ratios that you can embed in there. And that's one of the key ones that we've discovered as we go across the board.
Right. Well, you talked about cash flow and, looking at the P&L. And I do know a lot of people don't understand the difference between true, cash flow and the P&L, because someone might say, well, it says that I have profit, but there's really no money in the bank. Or it could be the opposite, where they don't look profitable, but they do have money in the bank. So do you want to even touch on that difference too, to help the listener understand why they can't just look just at the P&L to understand how the cash is going to be coming in and out?
Yeah, I'll touch upon that. Absolutely. In a P&L, certainly as business owners, that can be utilized, mainly as a tax instrument. To communicate some of that, and may not reflect the true cash flow of the business and the true profitability of the business. So we do look at that P&L as a document to feed into some other software that we use to kind of take out some of those elements that may not relate to the business itself and its profitability. And kind of stripping that down and dissecting it allows us to really get to, are you profitable as a business owner? Where is that coming from? What are some of those key ratios that Tate mentioned that may come from that? So certainly we do understand when we look at a P&L, there's more to that story that we need to dig into. And most business owners, of course, would use that differently than a true profitability measure within their practice.
Well, and for those who are listening who maybe aren't sure even how to calculate the ratios, I don't want to assume that someone would understand that. Can you touch on how they would even get that information and do the math to find what that ratio is?
Yeah, absolutely. Those key ratios, right, especially from the producer, is you just simply take your overall revenue and divide it by the number of salespeople or producers you have, right? However you consider that. That would give you your revenue. That would give you your ratio of producers, to the revenue that you're creating. The secondary thing behind that is you want to know the number of producers you have per customers that you're working with. Right? There's a capacity limit that you run into with that. So two different ways to look at that, but it's simply, the one is taking your revenue divided by the number of producers. That'll give you your revenue per producer. And then if you take the number of customers you have divided by the number of producers, that'll give you a ratio of what that looks like. And every business has a unique ratio that dictates capacity. So obviously on the other side, if you consider everybody in your organization part of the support or customer service side, if you take your overall amount of customers or your overall revenue divided by the total employees you have in your firm, that'll give you your revenue per team member from that side. And that's actually the literal, that's the nomenclature we use here at What's Next is revenue per team member. And then you want to look at the capacity, right? You take the number of customers you have divided by the number of total personnel you have, and that'll give you, your ratio of team members to customers. And that will again speak to capacity that we measure as we talked about before.
And if someone is listening and saying, okay, well, I get it if everyone works the same number of hours, right? That's easy. But I've got some people that work 3 days a week, and I have some people that work only a couple hours a day. And then I have some who work 8 hours a day. So I'm a little confused on how to figure that out, right? Do you want to help them with that part of it?
Yeah, absolutely. So you could translate that into kind of full-time equivalents. So, you consider a basic work week, we all consider is 40 hours. As an entrepreneur, we know you put way more hours in than that.
Right.
But unfortunately, not everybody that works with you as an employee wants to do that same thing, right? Sometimes you see that. So translate it into full-time equivalents, right? If you got somebody that works 3 days a week and somebody else that works 2 days a week, that's going to be the full-time equivalent of 40 hours a week. So just simply translate that, right? We have a lot of the ratios we figure, which is 2.5 team members instead of 3, as that translates. And you may have somebody that serves partially on the support side and does partially on the sales and producing side. So that person can be divided in between both of those as well.
Right. Okay, so the next question that I have for you then too is, you talked about some of these ratios and how to calculate them. So now someone does the math and they get that number. Well, how do they know if it's a good number, a bad number, and how do they make adjustments to make that even better?
Yeah, good and bad can certainly be relative in the industry. We certainly have benchmarks that we would utilize for each one of these metrics that we would consider to be, below the average, above average, or leading. And the good thing about this, certainly in some of those metrics that we look at, they're leading indicators of growth or leading indicators of something happening in a negative sense for the advisor's business. So, but benchmarks themselves or rules of thumb can be a little misleading too. So, certainly when we're working with an advisor or business owner, understanding what they do with that, we have to understand too what they're experiencing within their business, what they're feeling, because sometimes that may pull against what a number's saying. If a capacity number seems to be higher than the average, they may not be over capacity based upon what service they're providing, and that could also work the other direction too. So certainly we have guidelines for that, and we walk our advisors through that. But the process of really understanding what they're experiencing within the business needs to marry with what those numbers are saying before responsibly, I think they can make any decisions based upon just a number.
Yeah. The one thing we encourage, Candy, is all entrepreneurs operate and business owners operate a different type of practice, right? We've heard of people that are high touch, which means you're spending a lot of time really giving your customers or consumers a lot of love and a lot of touch as well. That takes more manpower, right? You can leverage technology to do some of that, but in today's world where you want to differentiate yourself, you can provide a lot of high touch personally, depending on what you want to do. That can make a huge difference with your relationship with customers. There are other businesses where they're really low touch. They communicate with the client very minimally. When the client calls in, they'll service them, but there's not a lot of proactive outreach. Well, that type of low touch business can serve a lot more customers with fewer personnel because of that. So that it's really important as we work with business owners that we help understand, what are you trying to do? And what is your philosophy around that? That feeds right into what Ben was talking about.
Well, and if someone is listening and saying, okay, well, I'm hearing you talking about benchmarks or guidelines, but I don't even know what it is for my industry. Like, where would they even look to find these numbers so they can compare themselves and see, am I doing okay? Am I, below the average? I'm above average. I'm doing great. Where would they find that information?
So there's a lot of different studies out there. Some of them, unfortunately, cost way more than a lot of our budgets can afford. So one of the coolest thing that is you can Google a lot of that, and you can find out specifically in your industry, or it will bring up specific resources that will give you an idea of that. That's one thing that we help our clients do a lot, is really figure out what can they measure themselves against. And we're always looking for other benchmarks. So one thing we do, we work a lot of our businesses with financial advisors and running a business. So we know those benchmarks really well, but we branched out into all types of different industries where we're really helping to build that benchmark. But one of the things I think, Candy, that's the basic of our philosophy, there's a whole bunch of coaches and consultants out there in any industry that say they have a system that will make whoever hires them into something specific, a high producer, a millionaire business owner, whatever it is. And sometimes what those are just cookie cutter programs that you go through. And yes, it may help with your revenue, but we really believe that the reason that customers do business with a business owner is because of their uniqueness. And a lot of those programs take away some of that uniqueness and make a business owner just like somebody else. So just because an industry has a certain benchmark doesn't necessarily mean that fits your business, because you may have found a particular niche. So kind of some nuances around what those benchmarks look like.
And I would add to that too, Kenny. We have spent a lot of time, as Tate alluded to, over the years, understanding the benchmarks in our industry, but also Tate has done a great job within our practice of benchmarking our clientele. And sometimes that can really help us to understand and kind of subdivide clients on those that are growing at a certain rate. Those that are acquiring businesses, they might have a different set of benchmarks that need to be considered. So certainly we've got that view from the inside, but also the understanding of the outside that could be used as part of that conversation.
Right. And I think people have to look at their own goals around that too, because some people may really want to go fast forward in business and just work, to achieve that goal. And some may say, well, I just want to do this part-time when my kids are in school, just to have a little extra income or something like that too. So there's definitely, if we're comparing ourselves and those goals are different, we're not going to meet those standards in most cases, I would think.
Right. Yeah, no, I mean, and that's something that people forget, right? It's easy to compare. You can find standards in any industry, but there's always that separation. All right, where would my business fit? I'm not running a multi-million-dollar business. I'm running this business to supplement my income and allow me some freedom and flexibility. So therefore, it's important that you figure out what your capacity is for your business, because even some of the smaller businesses can run into the opportunity to scale and not really harm their lifestyle. So, it's really about comparing yourself to what you want and then adjusting based on what you're feeling inside the business, which is a little bit less of a science and a little bit more of an art from that perspective.
Right. Right. And when you were talking before about these ratios too, that's things that have happened in history, right? You have the income and you have the expenses, or, how many sales did your salesperson make? So you're looking at the history and you're getting that information. But how can a business owner then take that information and become more proactive instead of reactive, and make those changes?
That's the old saying, what gets measured improves, or something like that. But understanding where they are as a baseline is certainly important. And typically when we're working with an entrepreneur, an advisor, early on in the process, we'll identify a couple of metrics that are specific to their business based on what they're trying to do. So if they're trying to get to a certain point, we may look at 2 or 3 specific metrics, whether it's revenue yield or operating profit margin, to give us an indicator of how they're progressing. But that's just the first part. I mean, they've got to really do a good job of tracking this as it's going. Certainly you can measure a baseline and you can measure where you want to be with it, but you've got to stay on top of that as things change. As a business owner might add staff members or lose staff members or change their target clientele, all of that can have an impact on the numbers themselves. So it's a constant monitoring, tracking, and understanding what's leading to those numbers really has to happen in order to move that to the next level.
Yeah, and as you're looking forward, Candy, one of the things we do is we include all those key ratios for our clients in the business planning side, right? So they can measure, they know in the past, hey, here's where I was operating the most efficient and effective business. If this is my growth rate, right, here's where I'm going to be next year. Now you can identify. Part of what should go into a business plan is a hiring plan, a training plan, a marketing plan that all goes into that. And those ratios that you build off of knowing kind of where your business is and how it's been running can be combined with that forward-looking business planning and say, okay, where does this mess up my ratios? And if I grow by this much in the first 6 months of next year, that's going to mess up. I've got to start to hire. And we all know if you need extra help, you've got to hire before you need it, because it takes a while to get some of them up to speed.
For sure. I mean, just even finding the ideal client or candidates before you even hire them and then train and that whole thing. I mean, it could be multiple months of lead time as well. So definitely knowing how long it takes you on average to be able to find and train is important. So if someone is listening though too, and they're saying, well, I'm not exactly sure how to forecast future business performance and how to plan for that growth, can you give them any tips on that?
Yeah, probably the easiest way, right? Everybody listening, and maybe they are, maybe they aren't, right? Is probably using some kind of a cash flow tool, whether it's a spreadsheet or QuickBooks or whatever it is. So the best way to kind of forecast that is to take where you are year to date, if you want to plan for the remainder of the year, figure out what your average has been across the board in both income and expenses, and average that out over the next few months. And now you can get an idea of where you're going to be. And then simply to kind of think through where you want to be in terms of business planning, you can simply take that same projection and then give your expenses a certain amount of inflation going forward and your revenue, whatever growth rate you plan on hitting. And that will help to forecast that. One of the things we have a tool we use that makes that really easy for the clients that engage us to do, to really take a hard look at that. But it doesn't have to be. It's not rocket science. I mean, you can, if you're decent with a spreadsheet, you could do it. It's nice to have it so it breaks up some of those ratios and it's built in. But that's a simple place to start, is to kind of project, where it's going. And it's okay. That's a basic part of business planning. You don't always hit those growth plans, but it gives you an idea of what you might want to consider.
And I know that as we're talking about this, people are saying, okay, like I'm hearing what you're saying, take these numbers, find the ratios, use it to plan, but there could be some red flags in there too, that they don't even know how to identify what those are. So could you touch on what those red flags could be? How do they even find them? Because a lot of people don't know necessarily how to find those things even in those financial reports, and what can they do to fix those so they have long-term success?
Yeah, I think some of the basic red flags are more common, I should say, red flags that we certainly see, not to sound like a broken record, but one that comes to mind is certainly around capacity. That if we start to see, a certain households per team member, households per advisor, that starts to exceed or approach some of those benchmarks, we just call them triggering points, to where that might start to create issues. We do counsel advisors and business owners to pay attention to that and to notice that, hey, that ratio itself, once you start to get close to that, that's a pretty good indicator that maybe you should start to look at hiring or taking a look at efficiencies within how you do business to address that before it becomes a problem. Certainly, other ratios that trend in certain directions, operating profit margins that decline year over year, unless there's a really good reason for that, capital expenditures or something that they may be investing back into their business, can certainly be red flags. If they're hiring team members and that revenue per team member or revenue per advisor does not pick back up after initial training or development phase, that can certainly be a red flag that maybe someone's not in the right role, the development's not taking place, or something's happening within there that the advisor and owner would need to address.
Yeah.
Those are a couple that come to mind there.
Yeah, and on a broader scale, right, the key ones are going to be your gross profit margin, which is what you have left over after paying the people that are driving your sales. So usually, typically in a typical business, your gross profit margin should be about 60%. If you see that, going up too much and your gross profit is higher than that, that may mean you need to add more salespeople or more producers that allow you to expand that capacity and sell more, right? So just because it's higher than where it should be, it doesn't mean that you're in good shape. It means you may be missing out on a growth opportunity. If it's lower than it should be, conversely, you may have some producers that just aren't producing, or salespeople not producing, that you want to address. The next one to look at below that would be your expense ratio, right? A typical business, right? And it can vary, but typically we look at expenses to be 35 to 40% of a business's revenue. when you start to get outside either one of those, if you're not spending enough, that could be an indication. But if you're spending too much, that could be an indication, which then goes right to your operating profit margin, right? That operating profit margin of 15% or better can indicate, you're solid. If you're below 15% operating profit margin, could mean that you need to reprice yourself or take a look at your business. Anything above 25% really means you can grow and set you up for growth. So those would be three of the primary ones, in addition to the capacity, that you really take a look at inside of a business. And that really should speak to the true cash flow, Candy, to your point earlier, not the P&L, right? There are a lot of things that show up on the P&L that we put on there because we know it's going to help us with taxes at the end of the year. When you're really operating as a business owner, you want to look at your true cash flow. What are my true expenses? What's truly coming in? Because that's really what feeds the family. It isn't what shows up on your P&L or what you do for taxes necessarily.
Right.
And Candy, I might add one thing if I could to that. One of the red flags that we see often from business owners, not specifically financial advisors, it happens in the advisory space too, but that they're not paying attention to the actual value of their business itself. All of these metrics are within the business and happening all the time. And, we see it often from financial advisors that they may go 5 years where they double their revenue over that time frame. But if we actually look at the value of their business, did the value of their business actually double along with it? And in many cases, it doesn't, and it lags behind. So some of those things, if a business owner monitors the value of their practice at the end of each year, for example, they can start to identify, is that keeping up with the growth that I think I'm actually having in this? And if it's not, that can be a red flag in terms of what's happening within the business, that the growth itself may not be sustainable, or there may be some issues within there that they need to address. So it's an area that I think business owners need to pay more attention to, and we certainly preach it, but they're building an asset. Their business in a lot of cases is one of the biggest assets that they may ever have. So paying attention to that value is very important within the metric analysis.
Well, I agree with that too. I've told people in the past too, you can't just look at the top line number, because some people will be saying like, oh, we're doing so well, we're growing. But if you aren't seeing that profit, staying with it, or because I've had situations where I've helped people and we find that their profit is decreasing as they're growing, right? And they're spending more on labor or different things too. And so you have to look at the whole picture to really see how you're doing. So I think that's one of the things that really businesses need to pay attention to. Like you're saying, focus on what is the true value at the end of the day, right? That remains in your business once you've, brought in that revenue. So I know this has been an interesting discussion too. I know we're getting close to the end of the time that we have together. And I know we've just scratched the surface. There's like so much more we could talk about on this topic, but I would love to ask if you have an offer that you would like to extend to our listeners. And then if people want more information, how can they connect with you?
Okay, very good. Yeah, we do. So one thing we offer is an introductory session. It's 3 coaching sessions for $500, which is a great discount on what we normally do, just to help somebody get started and have an idea of, identify some pain points and some things they may work on. So that's the offer we have. And if you want to get a hold of us, you can go to what'snext.coach out there on the website, and they can most certainly get a hold of us that way. Or you can email us. So it's pretty easy. It's Tate or Ben at what'snext.coach. And we'll be there to answer anything that would, anybody that would have any interest from that side.
We also put out quite a bit of content on LinkedIn. They can find us there, our individual pages and our team page as well. Certainly open to contact there as well.
Perfect. Well, thank you, Tate and Ben, for being guests on my show. I appreciate the time that you took out, to have this conversation with me, educate, the listeners, and it was a great discussion. Thank you.
Thanks for having me.
And to the listener, if you found today's topic exciting or informative and you want to hear additional information, you can find access to exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.